All right, good afternoon, folks. This is your daily video from SeasonalSwingTrader.com. We take a look at the overall broader market indices and then take a look at something that has caught my eye. So stocks closed moderately higher on Friday, although the Dow Jones average ended in the red as the 20,000 level still remains elusive. Financials topped the leaderboard as investors reacted mildly positive to earnings from Bank of America, JP Morgan, and Wells Fargo. Despite the gains, the KBW Bank Index still appears stalled around last year's high. Let's go ahead and take a look at the KBW Index. Looking at the BKX, or the banking index, you can see that we are still stalling around last year's high, and momentum indicators are continuing to point lower. Same can be said of the S&P 500, the SPY, SPX, the mini S&P, whatever market you're trading. Continues to hold below short-term resistance around 22.75 or 227.5 on the SPY, consolidating these gains from the post-election rally. Volume around these all-time highs is still running around 20 to 30% less than the 10-day average volume recorded in the middle of December. So clearly a catalyst is needed to fuel the next move in the large cap benchmark. Earnings season continues in the week ahead, providing investors with plenty of data to trade against. So looking over at a market that should be non-correlated to the broader market indices are gold. And we're looking at GDX and RIO. So let's take a look at GDX first. You can see here that we are consolidating up around here in the $23 area. We've broken these down trend lines here, and the gold mining ETFs are consolidating above these trend lines, which were broken the first few trading days of the year. Consolidation and a test of the previous level of resistance remains conducive for another leg higher in the precious metal producers, and the miners remain in a period of seasonal strength that began in the middle of December. So this, in conjunction, we have higher prices pointing in GDX going into March 1st. You can see this trade here is 7 out of 10, last 10 years for 70% positive trade rate. Average gain 10.5% with an average drawdown of 3.1, with a total cumulative gain over those 10 years of 34%. RIO, going down an individual stock basis, don't know that we would need to actually trade both GDX and or RIO. They should be moved somewhat in comparison, but we've got 80% historical win rate from January 11th, which was last week, into the latter part of February 22nd to be exact. Average gains of 8.7%, average drawdown minus 0.3%, with a total cumulative gain of 29.1%. So here on RIO, we've got a double top. If you're going to play the seasonal trade here, which we are trading right along line from a price perspective, this would be a momentum breakout above these two highs here and on upward. So RIO and GDX, both fairly liquid instruments if you're trading options. Selling out of the money put option spreads, or buying at the money or slightly in the money calls should work favorably for this trade setup. Until next time.